investors, welcome to Business Learnings. Market is rallying, probably touched its all-time high, and in this video, we'll talk about whether what's driving this rally first, and second, whether this rally will sustain or not, whether just this is just a post-budget euphoria which will settle down in a few days, or this is going to stay. We'll talk about all these things. So make sure that you watch the video throughout the end so that you get complete understanding, and do subscribe to the channel. Let's start. So right now I'm on a money control page. This page gives me the daily trading activities of FIIs, foreign institutional investors, and DIIs, domestic institutional investors. Uh, in India, if you closely look at the data, you'll find that the days when FIIs are net to net buyers, that day the market surges. And the day when FIIs are net to net sellers, that day the market falls down. That's take it as a law, because FIIs have a lot of money, more money than DIIs, and they are the bigger force which drive the market. Now, if you see, 1st February, 2nd February, 3rd February, 4th February, for the last 4 days, they have pouring money like anything. 1,500 crore rupees in a day, 6,000 crore rupees, 2,500. A lot of money they have been pouring in there. If you see the data of January, the last few trading days of January, you'll see that there has been a lot of selling from the same FIIs. So what happened? Of course, budget happened, but what exactly happened in the budget that instilled confidence of those FIIs? We'll talk about all these. Uh, Let me tell you that markets are forward looking, which means that the prices that you see, the levels of Sensex, Nifty, whatever stocks you see today, they are a reflection of what the major investors, the institutional investors, think about the future. Nifty is at its all time high because of two reasons. Either it's irrational, or second, it's rational. If it's rational, it means that investors or bigger, you know, bigger institutions, they are positive about India as a country. And where is this positivity coming from? It's coming from the budget, because budget's what happened in the last few days. And what exactly happened in the budget? Uh, Capital expenditure happened. Let me explain you. Uh, Last year, unfortunately, because of COVID-19, a lot of governments across the country, across the world, a lot of economies, they had to spend a lot of money because factories were shut down, businesses were shut down. They had to print money, they had to infuse money into the economy so that economy does not collapse, right? And this is what put a lot of pressure in the fiscal deficit. You have a fixed budget, you cannot spend more than that, right? But if you print money, you can probably spend more than that, and that's what happened last year. But if you spend more than what you have, you are going to run into trouble in the long run, right? Unless you do one specific thing which India did right in the budget, and we'll talk about it. We'll talk about it shortly. So the expectation was, as I said, the markets are forward looking. The expectation was, since India has already overspent, they will not have much money to spend in this budget. Right? This was the expectation. Since India has spent a lot, and you must have seen all the news that had come out. India is spending 10 lakh rupees, infusing 5 lakh rupees, and all that. So it was expected that India will not have enough money for this budget, and that's why this budget was not supposed to be very attractive. A lot of cut downs were expected, but India said that let the fiscal deficit grow, let it go to 9.5%. So this year's fiscal deficit will be about 9.5%. Ideally, the target was about 3.5%. India said that let it go to 9.5%. Even the next year will not bring it down to 3.5%. Next year we are targeting 6.5%. And couple of years down the line, we'll gradually bring down this fiscal deficit to the original levels of 3.5%. Right? And this overspending, and where exactly are we spending this extra money? We are spending that extra money on capital expenditure. And believe me, that's the best way a company can spend its money on. India is focusing a lot on healthcare. It will be focusing on healthcare in the next couple of financial years. India will be investing a lot in infrastructure. Now, let me tell you why capital expenditure is important. Suppose India Suppose government decides to build a road, and it's going to cost 1,000 crore rupees, right? Now, it's not just 1,000 rupees that adds to the GDP. It's much more than that. How? To construct that 1,000 crore rupees worth of road, you'll have to employ a lot of labor. So a lot of people are going to get jobs, right? To construct that road, you need a lot of raw materials. You'll have to purchase those raw materials across various companies, right? These companies will have to ramp up their production, will have to employ more people to produce more, and that's where more people are going to get jobs. Now, these companies which are supplying these raw materials, they must be buying their own raw materials from somewhere, raw materials in the terms of at least electricity, right? They must be purchasing it from somewhere, electricity or their crude raw materials, anything. So those that production, again, that will employ more people. So overall, you see the cascading impact. A lot of people got jobs. A lot of people got jobs, and when the people who do not have any money, they get jobs, they spend more, right? They spend more, they consume more, they buy more products. And where exactly are these products coming from? These products are coming from various companies, and these companies will in turn do good. Their results will improve, their share prices will improve, and everyone will prosper. And that's how the country prospers. That's how the economy prospers. And that's why capital expenditure is the best way to invest in your country so that it grows in the long run. And this growth in the long term has been the central idea of the budget, and that's why institutional investors have turned very positive on India, and that's why you see the markets are surging. So it's not a short term play, it's a long term play for sure. And the money will keep on coming in. That's what my analysis says. The money, slowly, steadily, the money will keep on coming in. Now, you may ask me that there is not an infinite money in the world. Money is not infinite, there has to be a limit. So, when will this stop? When will FIIs stop pouring in money in India? I'll tell you, they'll stop when they find a better, a more attractive, or probably a less risky and better return yielding uh, asset to invest in. And I have created a separate video for it. You will have to watch it to understand when will that alternative develop, and when probably that will give you a clue on when the stock markets might start to correct or might start to slump. But right now there are no signs of it. So my understanding says that markets will keep on rising. uh, Let it go along. Keep continuing your SIPs. uh, do not do lump sum investments. And again, I'm not a SEBI registered investment advisor, so do your own research before investing. These views are my personal and only for educational purpose. Thanks for watching this far. See you in the next video.